Alright everyone, Cowboy Trades here and welcome back to the channel for another update on Bitcoin. So what on earth is happening for Bitcoin right now? Yesterday we had huge volume stepping into these markets. We are leaving CME gaps in the dust at 20,000, and yesterday alone we had a major whiplash, wiping out both bears and bulls that were trading the market. So let's talk about all of this and more. In this video, I really want to focus on this massive divergence we're seeing from the SP 500. But before we get onto that, let's discuss everything going on for Bitcoin right now. So like I said, yesterday was a very intense trading session. We were trading round about 24,000 for about a day or so, and then we had a major whiplash up to 26,500, making a new local high. We proceeded to pump above the 200-week moving average, had a strong rejection from a level I'll talk about in just one second, and then after wiping out the bears, we completely wiped out the bulls as well. And since then, we've more or less just been chopping to the side. Now, if we do come over to this chart over here and pull up the EMA ribbons, you can see really exactly where Bitcoin got rejected from. We got rejected from the long-term moving average, the 55 EMA. If I zoom in, this is the weekly time frame. You can see we got smashed right against this around about 25,500 or so. We did manage to push up a little bit further, and if we do look to the left side of the screen, you can see if we are looking at the volume profiles, quite recently Bitcoin went down to almost 15,000 in November. What did we do after then? Well, we came down into an area where there was not much liquidity in the markets, and more liquidity was required to come down to these lower levels. So what did market makers do? They pushed us all the way up. We grabbed liquidity from these volume profiles, and we have now finally grabbed all of the liquidity from this range. So basically all of this immense trading history which we have spent round here, all of the previous trapped liquidity which was residing round about 25,000 and also correlating to these lows round about 26,700 has now been grabbed. You can see in the past 2 weeks alone we've had immense trading volume with huge selling volume stepping in, absolutely annihilating the bulls. This week is not even over. It's coming into Wednesday and we've got huge buying volume stepping in. We've been having whiplashes to the downside and whiplashes back to the upside. But with this whiplash, we have once again retested the 200-week moving average. And I'm going to show you a chart on this in just one second. But before we get over to there, let's talk about the volume that stepped into the markets quite recently. So if we are, obviously looking at the volume, we just discussed this a moment ago. What I didn't tell you is the exact figures. If we're looking at the Bitcoin Tether USD pair over on Binance, you can see yesterday alone, almost 700,000 buy and sell orders were accumulated in the market, mainly buy orders, but if we do come over to the 1 hour time frame, you can see that after we did reach this 26,000 level, we did have some huge selling volume stepping in, really pushing us back down to the downside from this level. If we are looking at the MFI, the money flow index, you can see since we've been kind of creating this rounding top formation, we topped out on the MFI at 97, then we pushed down again, we came up to this at 68, and then we came down one more time and hit this at 57. And this pattern that we've got over here, where the price action is making higher highs and the RSI or the MFI, whatever oscillator you're looking at, is actually a divergence that I do want to talk about in 1 second. But in terms of the volume in this market, immense volume stepped in. We got rejected once again from the EMA ribbons on the weekly time frame, once again got rejected from the volume profiles, and also bashed our head against the 200-week moving average and exceeded it and then got rejected from it for the second time in the past month or so. Now, with this, you can see MFI is still creating this downtrend. In the past few days, we went from 26 all the way up to 55, and now we're getting pushed back down from this trend line. And the stochastic RSI is also pushing all the way up. We're sitting round about 90. The long-term moving average, or sorry, the short-term moving average is actually pushing up and coming up to 100 right now. Indicative that we should be, rolling over and having this correction as soon as these start to cross. You can see there was a cross over here, and we did have a correction. There was a cross over here, and we did have a correction. We had a cross over here, and we had a really nasty correction. So, once again, whether you're bullish and you think that we are going to push above 25,000, or whether you're bearish and you think maybe this is going to be something like a BART pattern, and we're going to come all the way back down to 16,000, a correction is definitely due. The oscillators are screaming for this right now. So Once again, like I said, with this massive pump, we did create a CME gap all the way down at 20,000. And we've discussed this many, many times on the channel. If we are looking at the CME gaps that we've created most recently, excuse the smiley face, we've created a lot of CME gaps in this bear market. We've created many CME gaps before. The CME gaps which have been filled are marked by these blue lines over here. Or sorry, the CME gaps which have been filled have been marked by these green lines. We had a CME gap over here at 32,000 when we were in the bull market. We had a CME gap down here at 18,000 in the bull market. CME gap down here at 24,000 in the bull market. And once again, this one up here, we created a CME gap round about 35,000 or so. We have not filled this one. This is still a relatively new chart, so I'm just kind of feeling this one out. But most of the time, you create these CME gaps, you fill them. You create a CME gap, you fill them. You create a CME gap, you fill them. We fill most of these CME gaps, and we do have an unfilled CME gap at 29,000. I personally don't think that we're going to come up and make it to this level, but with that being said, when we had this most recent run up from the lows, we had a CME gap right down here, exactly at 19,800. We had this gap fill, or we had this gap start in January. And in the past 2 weeks or so, the past 7 days, we came down, nuked into this CME gap. We filled the CME gap, and now, as you can see, we had an unfilled CME gap here at 22,000. We filled this one. We're filling all of these CME gaps, and we have now created a new one, literally right down at 20,100. So definitely a target to keep your eyes on. So like I said, we've got immense volume stepping into these markets. Where is this volume coming from? Because if we are looking at the whale wallets are not really accumulating right now. Whale wallets have been selling off, and while I don't particularly have anything to update in the past 3 weeks from the whale wallets, if you are a veteran of the channel and you do keep up to date with my whale wallet videos, I think we made about 2 or 3 whale videos talking about how whales were selling about 3 weeks ago. I think I made 3 videos in a week where whales were just selling. And since then, we haven't had too much movement in them, but they have been still residing around about these lows, and they have started to sell off once again in the past week or so. While this has been happening, the shrimp wallets, the addresses with more than 1 BTC, these have been pushing back up and buying into this most recent rally, but not too much. They haven't been buying a crazy amount. Which is really telling me that a lot of the volume that stepped into this market is just existing wallets that are just continuing to accumulate. People that have been accumulating throughout the entire bear market, DCAing. There was just a huge DCA as we did break back down. We also had the balances on exchanges take a slight plunge back down to the downside as there was a major Bitcoin withdrawal, and as you can see, this plunge to the downside where lots of Bitcoin was being withdrawn from exchanges also did cause this massive sharp rally back up to the upside. Also quite recently we had widespread banking failure, and when I say widespread bank failure, I'm really talking about the major failure of Silicon Valley Bank. And what happened after Silicon Valley Bank is all of these bank stocks just got absolutely annihilated, and we did talk about this over here in this video. This is terrible news for the market. So not too much to update from then. There was a massive loss of confidence in the banking sector, and it looks like that is partially what caused this pump back up to the upside in Bitcoin, creating this huge divergence, which we will speak about in just 1 second. However, one final chart for Bitcoin that I want to update before we move on to the Bitcoin SP 500 and SP 500 segment of the video is this chart right over here. Now, we've been discussing this bearish divergence which has been playing out for Bitcoin, and as you can see, we've got price action topping out of this trend line, price action topping out, higher highs, higher highs, higher highs, higher highs, higher highs, and higher highs. In the past day, we came up and hit this uptrending curvature line once again, and if we look at the RSI, you've got highs, you've got lower highs, lower highs, lower highs, lower highs, and lower highs, hitting this downtrend on the oscillator. So What is this? This is bearish divergence, regular bearish divergence to be precise. This is where the price action makes higher highs and the oscillator makes lower highs. So this has just got even stronger with this most recent retest, and you pair this with the fact that we've got CME gaps down at 20,000. You look at the oscillators, which are topping out right now. Higher time frames, of course, we discussed. We've just quite recently grabbed all of the liquidity in this range. There's really not much reason, in my opinion, to push up higher than these volume profiles. We got rejected from the top of the EMA ribbons, at least for now. We've been rejected from the top of the EMA ribbons. And if we do come over to this chart, you can see we've literally smashed against the 200-week moving average twice now and had some strong rejections both times that we tried to exceed this line. And if we are looking at this curvature line, this is looking like a rounding top at this moment in time, and getting rid of the RSI over here, getting rid of this, hiding the 200-week moving average, which we've just discussed that we have got rejected from, getting rid of this, or no, we'll keep this one over here. You can see that while we are making this rounding top formation, this BART pattern is looking extremely strong right now. This BART pattern has a price target all the way down at 16,300. This has not changed since my most recent videos. It has only got stronger since we are, once again strengthening this regular bearish divergence. So let's move on to the most important topic of this video, the BTC SP 500 divergence. As we've discussed a minute ago, and as we discussed in my most recent stock market videos here and here, there's been a massive loss of confidence in the banking sector, which has really annihilated the SP 500 and allowed Bitcoin to rally against the SP 500. However, this is not the first time Bitcoin has had a divergence from the S&P 500, but I will point out what's going on right now. You can see Bitcoin had this local top on the 2nd of February, and this was actually the most recent top for the S&P 500 on the 2nd of February as well. You can see the S&P 500 just continued to break down, and quite recently it has been nuking to the downside. But Bitcoin, however, broke down, made a higher low, broke up, made a higher high, broke down again, made a lower low, which was, which is why I'm really saying there's a lot of whiplash going on right now. But nonetheless, since it topped out, it has pushed up and made two higher highs, while the S&P 500 has broken down and made a plethora of lower highs. So the S&P 500 is still getting nuked, and we'll discuss what's going on with the S&P 500 in just 1 second. But Bitcoin is having a 41-day divergence. There's not too much to talk about in this, but this is the most important takeaway from this video. Bitcoin is diverging from the S&P 500. We've got price gaps to fill at 20,000, and also the oscillators are topping out. And once again, this bearish divergence is getting stronger and stronger and stronger the more Bitcoin diverges from your typical markets. Now, we quite recently actually pulled up this chart before. This isn't the first time Bitcoin diverged from the S&P 500. During the FTX collapse, Bitcoin had a 15-day divergence where the S&P 500 was actually rallying at this time, but Bitcoin broke down into new lows. The S&P 500 proceeded to break up higher, and Bitcoin followed it on this trajectory when the S&P 500 was breaking bullish. Now, coming over to here, you can see Bitcoin had an 11-day divergence where the S&P 500 bottomed. It had a bounce, which is what Bitcoin did as well, but then the S&P 500 broke down into new local lows, and Bitcoin made a higher low and proceeded to break up further. Now, the S&P 500 from this local low broke up further with Bitcoin, and then when when the S&P 500 right here started melting to the downside and taking out its lows, Bitcoin very quickly followed and snapped back into the path following the S&P 500 like it normally does. Now, coming over to here, you can see there was actually a top where Bitcoin proceeded to put in its all-time high at 69,000. Now, unlike the S&P 500, which very slowly grinded up to the upside, Bitcoin was having these huge melt up, huge meltdowns, and huge melt ups. So at this moment in time, liquidity was really super topped out for Bitcoin. And this is why we saw Bitcoin top out before the S&P 500. And you saw Bitcoin break down to the downside while the S&P 500 was breaking up for a whole 55 days. So, like I said, this is not the only time that Bitcoin has diverged from the S&P 500. However, this 41-day divergence is the second largest one that we've seen since Bitcoin put in its top. Now, These divergences, when they do start snapping back together, they really do start to snap back together. You can see Bitcoin, like I said, was breaking down ahead of the S&P 500, but when the S&P 500 had its bull market top and started to melt to the downside, Bitcoin, which was already melting, had an even worse meltdown, as it was, once again, snapping back in and following what the S&P 500 does. So, like I said, there's not too much to discuss other than what we've already talked about. These divergences do not last long, and I'm not saying that Bitcoin will always follow the S&P 500. I'm actually a believer that the banking system will fail, and Bitcoin has a very, very strong chance of, becoming its own global currency, which it already is, but it will be taken more seriously, in my opinion, in the future. I don't, however, think that we're at that doomsday scenario where the banking system is going to fail like this. I don't think that Bitcoin is ready to diverge from the S&P 500 right now, and I do think the US dollar has a few more years at least until it is ready to lose its status as the global world reserve currency. And with that, I think Bitcoin will continue to follow the path of what the greater markets does. I think Bitcoin will continue to follow the S&P 500, and when we are looking at the S&P 500, the S&P 500 is not looking good. We recently had corporate insiders sell, which we talked about on the channel. Since then, we've had some extremely bearish formations play out on the markets. Heikonashis are melting to the downside for the S&P 500, and it looks like in the immediate short term, we've got about another 3.5% to break to the downside, coming to this 200-week moving average. We quite recently lost this upwards trending line of support. We broke to the downside, flipped as resistance, and broke back down. You can also see this bear market trend line. We had a throw over, we came back down to the downside, retested this as resistance, and broke back down. We've also lost some very important asymmetrical triangle Elliott wave theory patterns. We had a bearish 5-wave structure breaking into an asymmetrical triangle, forming a B, C, D, E 5-wave asymmetrical triangle, which in Elliott wave theory is a continuation pattern depending on the path that you break into it. Now, as we had a bearish 5-wave into this asymmetrical triangle, you can see we had a throw over. We broke back down, and these are kind of like the two trend lines that we just looked over here. This one to the upside is slightly different. However, these charts more or less look pretty similar, where you can see we kind of came to the side of this triangle pattern and we broke to the downside, flipped it as resistance, and we've got on the daily time frame red, green, red formations looking like it wants to take the S&P 500 lower. The S&P 500, my price targets are also unchanged for this. We talked about the other day how there's a price gap to fill at 7.76%. And the S&P 500 has been following our analysis, which is just very, very strange that the S&P 500 is doing exactly what we predicted. The stock market is absolutely nuking to the downside, but Bitcoin is just whiplashing traders left, right, center, wrecking the bulls, wrecking the bears, which is why for right now, I'm really sitting on the sidelines and I want to see how Bitcoin will respond to this 200-week moving average. I either want to see a weekly candle body close underneath 25,300, solidifying the bearish theory, or if there is a chance to pivot to short-term bullish, I would definitely need to see weekly closes above 25,300, which then in the short term, I would be saying there's more chance of further continuation to the upside. However, until we do start closing above 25,300, and I'm not talking about 1 hourly candle body closes followed by huge rejections. I'm talking about weekly candle body closes on 25,300, preceded by a volume confirmed bounce. Until we see something like that, then the bearish theory is definitely still valid in my opinion. I cannot be bullish when we're creating price gaps down at 20,000, while we're topping out for the oscillators, while we are making rounding tops, while we're making bark patterns, and while we keep on getting rejected against 25,300, which is this 200-week moving average. Until we flip it, there's no bullish theory in my opinion. So that being said, that's pretty much all I've got. Once again, take away from this with what you will, but the main takeaway from this is that Bitcoin is having a huge divergence from the S&P 500. I'm not saying that we can't diverge for another week or so, because we did have this, what was it, 55-day divergence from the S&P 500 in this bear market so far. It is a possibility that we do have another week's worth of divergences. However, if Bitcoin starts closing beneath 25,300, getting rejected from this 200-week moving average, I think this is going to be a failed move equals a fast move in the opposite direction, taking us down to the bark pattern at 16,200. And wrapping up the video very, very quickly on our volatility metrics. We've been talking about the VIX. The VIX is up 16.5% today, which is why I'm saying, you know, one of these markets is lying. And I posted this over on Twitter. You know, these charts are in disagreement with each other. We've got Fed futures breaking down to 3.6%. This is basically telling us that the Fed is going to start moving from the interest rates at 4.75% down to 3.67%. We've got the VIX up on the daily time frame in the past 1, 2, 3, 4. In the past week, we've got the VIX up 43%. The VIX is shooting up to the sky right now. We just created a gap for the VVIX. The VVIX is up 21% today. Since these lows like a week ago, the VVIX rather, is up 71.5%. These volatility metrics are screaming that the S&P 500 is going to continue breaking back down. If we come over to the CBOE implied correlation index, come over to the weekly time frame, we are bouncing from all of these crucial uptrending lines of support, and we are melting to the upside, which is indicative that the S&P 500 should begin absolutely nuking to the downside. You can see the last time we had a huge spike for the CBOE implied correlation, the S&P 500 absolutely melted, and we are continuing breaking up in the higher time frame, making higher lows and higher highs. I do think these volatility metrics are going to continue melting back up. And while I want to wrap up the video on one final thought, if we do look at this chart over here for the VIX, we've been talking about this 2008 fractal and how this has been lining up. I would like to move this over slightly and show you something very interesting. If we forward our data from the 2008 VIX fractal just a tiny bit, you can see how beautifully this top, which we've obviously retroactively fit, comes down, predicts this bottom, which we have started curving up from. I do think something like this for the VIX is soon to play out, and I do believe volatility is going to return to these markets in a major way. I do foresee the S&P 500, your stock markets, your equity markets, continuing to nuke to the downside, and with that, I don't think this divergence between Bitcoin and your traditional markets is going to last very long. I think we've got about another week or two at best before these charts start playing catch up, before we come down to these CME gaps, before, you know, these oscillators start topping out and we start heading back down. And of course, we also do have this bearish divergence, which is just getting stronger and stronger and stronger every time we get rejected from this 200-week moving average. So, ladies and gentlemen, the main takeaway is I don't think that Bitcoin is going to diverge from the S&P 500 for much longer. And whether you're a bull or a bear, we can all agree that 25,300 is the major level to keep your eyes on. If you are bearish, you do obviously want to see that candle body close on the weekly time frame beneath 25,300. And if you are a bull and you do start seeing weekly candle body closes above 25,300, that is lending a lot of credibility to your theory that we should be pushing up higher. For right now, these markets are moving absolutely schizophrenic, so I will be sitting on the sidelines waiting for that weekly close and waiting to see what we do with this 200-week moving average. This will decide, in my opinion, whether this is a bull market or a bull trap. So for today, my friends, that is all I've got. If you do enjoy my content, as always, let me know down below by leaving a like and a comment. Share the videos with your friends. If you do want to further support the channel, you can also click the join button and become a member today. However, you don't need to do this. Really, the best way that you can support the channel is just liking my videos, leaving comments, share the videos with your friends. This helps the YouTube algorithm. This pushes my content out to new people. If you want more of my content, follow me over on Twitter at 618_cowboy. But yeah, for today, that's all I've got. It's been your boy Cowboy Trades. I am out, my friends. Peace.